Hello, this is Andrew Reichert, the host of the Real Returns podcast, and I'm joined by my co-host, Dan Croce. Dan, how's it going today?
It's great. It's fun to be with you here in person in the studio. We usually are dividing and conquering, but fun to do something a little bit different. I'm looking forward to it.
Yeah, we're going to give it a shot, and I'm excited for our guest today. I'm going to let Dan introduce him. For those of you that it's your first time joining in here at Real Returns, we talk about investing, and in particular, the impact that it can have on the world around us. So, Dan, would you mind introducing our guest today?
Yeah, happy to do that. I am thrilled to have the opportunity to introduce you to Sumit Koovor. Sumit is actually one of our own. He's a team member here at Birgo and our new return REIT fund that we've recently launched. And Sumit's role is that he is our investor relations lead. So I'm really particularly excited about this conversation because that's a part of our organization that's near and dear to my heart personally. I've always been the one that was primarily handling our relationships with investors and building out that part of the business. So I love the opportunity that we have to engage with people's capital and help them on their financial journey to achieve their goals. And I know that's something that Sumit is passionate about as well. So with that, Sumit, why don't you introduce yourself a little bit to our audience and tell folks about how it is that you came to be in the world of investor relations.
Absolutely, Dan. My journey starts, the son of Indian immigrants, but grew up here in Northeast Ohio, which brought me to the Midwest, and was really fortunate to grow up in kind of small town, Youngstown, Ohio. That journey brought me to Southern Ohio, where I went to school at Miami University. And that path led me to accountancy, where I started my career in Big Four accounting in New York City. Similar to you, Dan.
I share your pain in that. We both are recovering accountants.
Recovering accountants is a real thing. But I think that exposure really did widen what the world was. I got exposed to real estate primarily from the institutional clients that I was on audit and consulting engagements. And valued that. I also valued growing up in the Midwest, which was one of the reasons that brought me back here. But I got exposed to real estate by kind of these institutional clients and really looked at why real estate was a great place to build wealth and why these clients were parking their money, but also individuals over decades.
Mm-hmm. And why is that? What was it that about real estate made it feel like a good place to develop wealth?
Yeah, I think, you just look at the way that like kind of the banking system, insurance system, many different industries that have kind of tested times, and these were the major industries. It was banking, insurance, real estate, and I think that many times people had produced wealth back in the day in manufacturing but needed a place to park it, and real estate was this resource that continued to add value in the areas it was, whether it was any asset class, but specifically, as we talk about here at Birgo and Return, is multifamily having a demand side that I really loved. And then there's the leverage side, which is good leverage, which is having a bank lend money and then the ability to have a tenant or a resident actually pay down that loan or that principal. And so there's power in good leverage. And as Buffett says, there's also power in bad leverage as well. Mm-hmm. So it really just exposed me to, kind of going back, is when I grew up in Youngstown, I saw certain parents that were actually able to be there with their kids. And it was kind of the spectrum. It was either kind of the traditional blue-collar workers that worked in the automotive industry all the way to the business owners and real estate investment professionals. So that's where I reverse engineered. I was like, do I want to go into post Big Four accounting and trying to see what was my next step in my career? It was like, do I want to go into venture capital, a startup, or real estate? And as I started to study it, it just seemed like a true way to build wealth slowly, but over time it made sense and it was very predictable.
Mm-hmm. Mm-hmm. Yeah, that makes sense. I'd love to hear more. You mentioned leverage, and as we talk on this show about the impact that our capital can have, that is something that's unique about real estate, where you can borrow, $4 for every dollar that you put in, or something like that, if it's an 80% loan to value ratio. It's just not true of the stock market, where you could maybe borrow 1-to-1 or something by taking margin on your account. So How do you think about leverage as it relates to really seeing more impact for your dollars in real estate?
Yeah, I think in the leverage question, I think it's a test of, one is I think there's two sides of it. Multifamily, from a banking perspective, I think has a lot more comfort from a risk perspective from a lending side. So I think from a stock perspective, you have like the issuance paper, and there's volatility because of the kind of real-time liquidity of the stock market. Whereas I think that with an illiquid investment, it's really on the underlying cash flow fundamentals. And so I think the leverage there from a banker's perspective is that you can actually predict and be able to take back that asset and see an income stream, whereas a business or stock, depending on the industry, could be very volatile, and we've seen that in the stock market. So I think with proper leverage, to your question, is I think that that over time there has been ratios, whether that's 80%, which is like a max leverage, or kind of what we do, which is more of a mid to low leverage approach. And I think that leverage has power if done properly, but that you don't want to over leverage things, because then in downturns you're exposed. So I don't know if that answers your question.
Yeah, it does. In fact, top of mind for me is, I know everybody's talking about maybe another recession is coming, and as I think about what happened in 08 and 09, leverage was a big part of that. I mean, there was. There were people that were 100 or 105% leveraged on real estate, which is a whole different ballgame. But do you see us in a market that reflects some of those same dynamics in terms of leverage that were existing back in 08 and 09, or do you think it's different?
Yeah, I think there is a difference. Like for me, when I was around, and really entering my career, as we exited the financial crisis. So I was seeing what happened from the repercussions of loose banking policy, where there were like no stated income loans, really lax policy on guarantors. And so when you're lending, but there's no repercussions for what you're doing, you're exposed to more risk. And I think it's like a rubber band, is that as you expand so much, that eventually it breaks. So I think that I think this question comes up a lot when people ask me, why are you in real estate? I think, one of the stories I share from a personal standpoint was just, my parents coming here and not getting the best financial advice. They, not to any harm of their own, they just consulted local advisors and local bankers that probably had the best intention, but were not really steering them in the right direction. So I think from an impact, from a mission-driven side, I feel a lot of drive and excitement in getting up and really being that person that can educate someone and help steer them towards, one, quality investments, but also from a risk perspective, low risk, but great yield on their returns. One, from that, again, that pain point that I felt that my dad and mom were barely beating inflation when looking at a portfolio of what they had invested over a long period of time. So that's like on the personal side. Then as I've grown in my career, I realize how many people, whether well-educated to non-educated, don't have access to quality investments, and that lack of education is what makes them not decide, which can be one of the worst decisions to build and grow wealth, which is, one, getting started, two, diversifying, and three, staying consistent with that. So I think that the reason behind it is really, one of the things that I shared with Dan when starting is because my dad being a physician, when I talk to physicians that have that same profile, that they're busy with their careers but really didn't get training on personal finance or investing, is I find a lot of reward in helping steer them or be a steward of their capital.
That makes me think, in my role historically, I've had a lot of conversations with investors, and when people are interested in real estate, we often talk about this phrase, the paralysis analysis, or analysis paralysis, I got backwards, but with this state that people get in where they get kind of overwhelmed with all of the million different decisions they could make, and they don't want to part with their hard-earned money for good reason. They want to feel really confident. So how do you approach that in your role when people are trying to make a decision. They're trying to put their best foot forward to, invest in their future for themselves and their family. And yet they just have uncertainty and they have trouble sort of getting to the point where they're comfortable making a decision. How do you
Yeah, I think that's a great question. I think the way that I think about it in my world is similar to how I assess like my group of friends. Is there's some people that are like one of my friends that are impulsive, but there's one of my friends that needs every single detail of what we're going to do, at what time, at what specificity. And that same profile kind of comes out when talking to different clients, whether it's someone that's an accountant or someone that works on a manufacturing line and is just needs it in the simplest way to understand what to do next, to a physician that is risk averse and needs every single point of what is the downside. Whereas if you talk to a business owner or someone a little bit more entrepreneurial, they understand it. They're quicker to make decisions. So it's always based on where is that person's indecision coming from, and like where is their comfort. So I think oftentimes we make decisions to what you said, which is when we are uncertain, and so it's always about building that comfort with a certain client to what they need, what answers they need. So for me, when I talk to an accountant or an engineer, they need very specific, detailed level responses. Whereas if I talk to an entrepreneur or a business owner, they're really worried more about the kind of action around how they get to their return, if that makes sense. So like, what is the underlying fundamentals that generate this return? They're quicker in a decision point if it meets their criteria, versus an accountant or engineer or doctor that may need some more time to think through it, but they also are the slower in the process of how soon they invest.
Mm-hmm. Yeah, that makes sense. I think one thing too that I found is always helpful is just you're actually being an advocate for that person. You want them to consider this because it's actually in their best interest. If they sit there and never part with $1 and it sits in their bank account, well, it's especially in an inflationary environment, it's losing money in real time. So you're trying to be an advocate for them to help them, develop the comfort level to be an actual, investor and someone who takes a little bit of risk. So interesting. Thanks.
Absolutely.
You're passionate about, Dan, just in terms of personal finance and making sure folks are educated. I was thinking about your point about your parents and them realizing that kind of later in life, and how you're passionate about, particularly earlier in life, getting started investing. What's like a typical age where, or maybe age range, where folks should really start thinking about their capital and investing it and having impact with their capital?
I would say the earlier the better. I think it's obviously challenging for a 1-year-old to comprehend the power of compounding, but if that could have been implemented when I was young, or any of my nieces or nephews, I think that there's power in learning the principles of saving and not living off of everything that you earn, and then also deploying that capital to actually earn over time. So I think, you look at these tables for the power of compounding, and I think, you could see someone who saved up $100,000 till they were 35 versus someone who parked, whether it was $1,000 a year from the point that they were 20 up to 35, mm-hmm. and that compounding from that 20 to 35 just absolutely annihilates someone who's saved a little bit more but started later. Mm-hmm. And I think that it comes from the power of compounding. So if I could advocate for anyone, it would be to get started as early as you can, educate and teach your children or the people in your circle why and how to invest, and really teach them how to fish versus doing it just for them. Mm-hmm. But I think there is power in learning the principles of putting money away, delaying gratification, and really allowing that nest egg to grow. Mm-hmm.
Yeah, that makes sense. What are some of the ways that you think about like measuring impact in your role? So obviously there's the return that investors are getting, but are there other measurements beyond that you think about in your role?
Yeah, I think oftentimes when I wrote, one of my mentors had shared, he's like, oftentimes people sweat the small things. So him and his daughters would be, and his wife would be causing chaos. And I was like, how are you so relaxed? And he's like, he's like, this is not going to affect me when people are reading my eulogy at my funeral. And he's like, focus on the big things, focus on the lives you impact, the people you're around, and what people will say about you when you leave. So I think in recent years it's about like how many lives can I impact, and so it's been more about like, over the past number of years of helping people invest, it's that those special moments where you see someone's life has been changed because they were able to kind of see the trajectory towards retirement and like really find a place to park money that wasn't volatile. So I value that. The other side, I think, as I've grown, is it's been the power is when one person, you earn that trust, you build that relationship, but those referrals and those relationships that expand from there have been some of my favorite things. So, one story is like, I started with a family member and two of their kind of cousins and uncles, and so it was 3 members of the family, but over the course of our relationship expanded to 10 plus, and now it's across 3 generations. And so like seeing that come together has been very rewarding versus just a one-to-one impact that I value. The other side is like oftentimes you can either have families that are very open about money and finance, but oftentimes it's not openly talked about. So to see that education process, which is like getting on webinars with the whole family members where it's like 20 plus people and having them all some passively listen but some get educated, and seeing that pass down of information where the older generation is really trying to let those others learn the process, I think has been really rewarding because you see that they're now getting to start earlier and have those indecision points tackled. So
yeah. Are you guys doing that in your family?
Yeah, so we do, but we don't. I would say the men in the family, we talk whether it's equities, stocks, or real estate investing. And so in real estate investing, we actually have joined up and invested together. But there's different profiles in the family. I come from one side of the family, or my brother and sister are lawyers, and my brother-in-law is a lawyer. So they're very analytical, very risk averse, and so they have a different approach. And then there are a few people in the family that are in business, and those are the ones that are like they're ready for the challenge. They understand that things take risks, but that there's also a proper way to park things. So it's not as much as I would like. Whereas like some of the other sides, I've had different families that are very collective in their decision process. And if I could have my ideal, that would be it. But everyone is born into a certain family. I think I can mold that for the next generation.
Yeah, I love that as a vision for how you can impact the next generation. And Dan, being the person that has the most children between the 3 of us, I'm sure that's something you think about. Are you instilling some of these financial education principles with your kids?
I actually am. It's a passion of mine, and it's a lot of fun. And I actually find that kids really like to engage with that content. It's a way for them to understand better the world around them. If they can have a framework for when I walk through a grocery store and understanding what this price means something, and that the money has to come from somewhere. And my kids in particular think it's fascinating that they can own some of McDonald's or whatever the public company, or Chipotle that's part of that brand. So they actually really enjoy that. And to your point, Sumit, I think there's nothing more important than trying to educate people at an early age, because the math, as you said, the math is astronomically different when you start early. So on that point, I wonder, are there areas or ways in which you've had an opportunity to try to engage people at an earlier point in their life to start their financial journey towards investing throughout your career?
Yeah, absolutely. And to your point with the kids, I have an example from this past weekend. Is we went to go look at the mall after Thanksgiving for some Black Friday, just to kind of walk with the family and check it out. And my little nephew, a 4-year-old, Lukey, is trying to buy gifts for my grandmother, so his great grandmother, and his nanny. And he's sitting there trying to buy something, but he doesn't have money. So I was so happy to hear my sister teach him this principle that he's going to have to go to his piggy bank and pay her back. And he was so stubborn about saving his piggy bank and that's supposed to grow and save. And so he had learned those lessons, but hadn't realized where his money or where this money comes from to be spent, where people have to earn that actual income and actually spend it on things. So I think he's learning those principles at an early age. I think in the early side, I think some of the more interesting. Typically, historically, I've had clients that are kind of on the older age, so 50 plus, that are towards the end of the third chapter of their career and looking at targeting retirement. And so that's been a large conversation around what income do they need to be on and that side. But there has also been, whether it's younger individuals that either inherited, came into some savings or did well in their careers, and we're now looking at like, how do I invest? I've never been exposed to having this much money. And I think the process is really understanding their goals at the end of the day, because what we do may fit a component or it may not, but it has to really meet their goals and be an advocate for them first and foremost. And so you have people that typically are younger that are looking at a little bit riskier things, but I think understanding that diversification from a portfolio perspective is really key, whether you're investing in public stocks, private real estate investment funds, or public REITs, that diversification is key. So I think embedding that principle on even these younger investors, I think gives a little bit more comfort that they're not putting all their eggs in one basket or making one bet, which I think that when people earn money at a younger age, they're comfortable doing that, which may not be the best strategy.
Yeah, makes sense. As you think about educating folks, particularly younger folks, what are some common obstacles or challenges that you bump into? Maybe pushback, things like that.
Yeah, I think the most common is that they may not understand the actual structure of the investment. So I think I think Dan touched on this earlier, but I think we as society are flooded with so many options. So it's really difficult to sift through and understand why is something a good investment from a strategy perspective and why you want to get exposure there. Specifically in what we do as alternative investments to the stock market, I think it's really important to educate and share why it's important to vet the people that you're investing with, because I think that's the key part of what creates the value in an investment. These private investments, it's really how are the people behind it going to operate, and how are they going to manage my money when I'm not around. And I think vetting people for their track record, how they treat their tenants, in our world, tenants, their employees, and the intentions and values behind them, I think speaks volumes to how someone is going to act with your money when things are in good times and in bad times. And I really, when I'm sharing, I'm constantly advocating to vet and get comfortable with the people that you're investing with, like a marriage, because these are not just trading a stock and getting out of it tomorrow. You're really thinking about a long-term partnership. So you want to be very intentional in that approach, be comfortable with who you are partnering with, and then be ready for the long ride through those good and bad times. And I think that if you do that and you get comfortable with the values, the strategy, and the kind of investment thesis and how their approach is, I think that you're crossing off buckets that really will steer you towards good opportunities.
Yeah. One thing I'm thinking about is how, in order to have the impact that you want to have people, in a position where they're wanting to invest and wanting to engage, they need to have clarity as to where they want to go. And something that I find is that sometimes people don't actually know where they want to go. They know that they should invest, or they've been told that would be a good thing, that you want to try to earn some passive income or diversify. How do you help people sort of make sense of how they should, meander their way down the path when finances can just be a confusing thing?
Yeah, I think that's the range that comes from where someone is in their life, and whether someone is in the later stage and approaching retirement, and understanding, everyone is investing not to just have a pool of money in their bank account. There's a purpose behind that. And so trying to get to the reasoning behind why they want to invest, I think is one of the more important parts. One from a connecting with someone, but understanding their why. And I think when you tie that to how investing over the long term gets you to those goals, I think that those are when I see that people take action, because it's tied to something that they actually want. When it's more like, this is the best investment, like this is a great opportunity, but there's no correlation or tie to what issues or problems that they're trying to solve. I find that there's still that, okay, maybe I'll do it, or maybe I won't, but I find that it's more powerful when it's tied to, let's say, someone who's younger that's looking to kind of diversify and have a different income stream from their business that they have. Now that's a different goal than someone who's a retiree and looking for income. But when an offering such as what we do at Return or at Birgo that actually solves that, I think that then you're meeting the minds of actually tying it to what their need is. And that's when I find that someone has conviction, has an understanding, and then actually feels very comfortable in investing. And I think that when I get off the phone with someone and that's the takeaway, that's the biggest win, because those are going to be the people that continue to invest and continue to be kind of partners for life.
Mm-hmm, mm-hmm. Yeah. That makes sense. I love what you said about tying it to a person's why. Do you find that people know their why, or is that something you have to help them discover?
I think people do. You need to. Some people are more reflective than others, but I think that deep down, it always doesn't come up in surface level conversation. I think someone may say, "This is the reason I need $1 million in my bank by this day," but they may not be highlighting the reason they need that and why that target date. And so digging into a strategy that actually gets them to those dates in a reasonable fashion. Mm-hmm. I think it is a more that I have to ask questions to get deeper to that why, that oftentimes someone may be just saying it from what they've read or heard or viewed, mm-hmm. but not really from deep down reflection. So I do think that there is a given just a large experience of talking to so many people, that there are common themes that come up, but that by really approaching things in an individualistic process, mm-hmm. that I'm able to connect with someone and understand their why through building a relationship. And I don't think it always comes off in that first conversation that people are authentic enough to know that why just on the first few minutes of a call. I think it comes out over time as they gain comfort also in opening up of the reason of why they're investing.
Mm-hmm, mm-hmm. Do you have any examples of those whys, either from your past life or ones you've heard? What's an example of a why? I have to have 7 Ferraris so I can drive a different Ferrari every day of the week.
That's been the most challenging. Those have been the most challenging ones to get to, because I'm like, this can happen. But let's get you to this calculation.
Yeah, 7 different colors.
I think the tougher ones and the ones that I found more meaning in is when someone's invested with a bad opportunity, mm-hmm. and now really is struggling to detach from this negative experience, which is principal loss, and making a decision but it not working out, whether that was a bad operator or just the fundamentals of the deal. Mm-hmm. But helping someone move past that, I think, has been some of the most rewarding. So I had, cryptocurrency is a common mm-hmm. theme that comes up.
Sure.
And so you have people that see the amazing huge returns, but don't see the significant volatility. And so in conversation with people that come to the realization that real estate is a great one, recession resilient asset class, a low risk, high reward yield if done properly. It's been those conversations which is getting someone off the sidelines when they've been, quote, burnt, mm-hmm. That have been rewarding, but very challenging to guide them to that path, because they're much less trusting, rightfully so. Mm-hmm. But I think that those have been the more challenging versus trying to get the 8th or 9th Ferrari.
Right.
I have had those. I have had those clients that do have those type of goals as well.
Yeah.
So it is a spectrum.
Yeah, that's. I was curious. I mean, I can think of a couple examples off the top of my head, like maybe they want to leave a legacy for their children, or maybe they care a lot about charitable giving and they want to give a certain percentage. But I also have to assume that some people just want a lot of money to spend a lot of money. Yeah. So I was just curious, like what are some of the whys that?
Well, I think that's the root of it. The first need is just like survival. Can they survive the longer lives that they're living? I think that's like a core principle.
Yeah.
And then I think that commonly you'll see a spectrum, but oftentimes it's taking care of that nuclear family and then kind of expanded relatives. But then people that are more active from a purpose perspective, whether in their local communities and in local initiatives that do have a bigger quote, kind of tied to the theme, an impact where their dollars are after they're retired or past when they're gone, like where their legacy will live. So, but I think the immediate need most oftentimes is how do I park my money today so that I can really be ready for retirement, whether it's 30 years from now or within 5 years, and see predictable flow of income. And typically many people are shifting from their 401ks, retirement funds, when they've realized that there's another path and there's this other vehicle that is kind of more predictable, less volatility, and can actually see the income stream coming from, let's say, cash flow of a 100-unit multifamily apartment complex, and really value that they can actually knock on it and touch it, and it's not disappearing, and that they can depend on that income stream that they need to live.
Mm-hmm, mm-hmm. Yeah, that makes sense. So obviously you're a advocate and proponent for real estate investing. How do you think of that as a part of a broader asset allocation? Like, do you think folks should be 100% in real estate, or should that be a portion of their investment?
Yeah, I think diversification is really important. I think that that it's dependent on the types of deals you do. I have a mentor who is the reason that I got into commercial real estate, that is 100% commercial real estate, and it's something that he lives and breathes and does great deals and understands. And so that concentration of being 100% is a prudent and wise decision for him to do, because it's something he understands, has competency, and is successful in. Mm-hmm. I think for the masses that there's an important portion of having diversification across all spectrums, whether that's equities, fixed income, alternative assets, just because you can make a bet on many things, but you're not always going to be right. Mm-hmm. So to put your all your assets in, let's say, tech stocks, may have done well in the short term, but over a 30-year period, that might not be the case. Mm-hmm. And similarly, that may be true in real estate as well, that there's cycles. And so I think diversification is something that I continue to be a steward of, which is, one, be contrarian. So oftentimes, I am not the biggest shopper, but I like to shop when there's discounts. Mm-hmm. Many times people like to bet on things when they're rising, mm-hmm. And sell when they bought at a high and things aren't doing well. Mm-hmm. I think psychologically we have to train ourselves to really understand that the principles of buying things when they're depressed, no matter the industry, and being investors for the long term, not the short term. I think that's a bigger concept around there, which is, I think, delaying gratification and having a longer investment timeline is very important. I think many times people can want to get rich overnight, but realizing that steady returns at 10% per year compounded create millionaires over a 30-year period. And so if you were to just do that and stay towards the path versus jumping towards 100 things and then potentially losing money, that you can earn that by just having a diversified pool of things, earning a stable, consistent return versus trying to hit a 40, 50, 100% return on some stock recommendation or some recommendation.
How would you say you profile as on a spectrum of risk averse to more of a risk taker? How would you say you profile as an investor?
Yeah, I think I am. In the central. So if you have risk averse over all the way to the left, and you're a risk taker all the way to the right. I think I am subtly risk averse, like slightly from the center.
Yeah.
I think it's my approach to things is like from a decision point, I do need to understand the downside. I think that's one of the biggest principles that I look at, but also kind of to your point of leverage is seeing whether there's asymmetric risk reward, which is like if I make this bet, what is the risk of my principal being going down, but what is the upside of making this bet?
Yeah.
Cool. Well, I'm going to be heading us shortly to our wrap up here with the lightning round. Before I do that, just one quick question I wanted to touch on is, as you know, here we are passionate about improving lives through real estate. So when we think about investing, we think about everyone in the value chain. We have investors on the one side, but then we have employees and we have residents. Since we manage our own properties, we care a lot about what the experience is for the residents at our properties. How much do you think that plays into the investor decision-making process when they're thinking about, I'm going to part with $1, I can either, I can just look at my ROI, or I can think about my ROI and what's this dollar doing? What's the character of the manager, and how are they going to think about the activities that happen within the portfolio? How much is that a part of the conversation?
Yeah, I think with the individual investors, whether an accredited investor like a high net worth individual or a non-accredited investor, just everyday person, I think that may be less of an intentional question they're asking. I think it comes off in who you're investing with, the character of the team behind it. I think that's a crucial component, which is you can have people that are under investing in their communities, getting complaints and really not depicted well. And I don't think a lot of people would be like, hey, I'm so proud that I'm an investor in this. So I think there's that spectrum. I think the making a larger impact with the dollars comes when I've had conversations. It's been more on the institutional side or family offices where they want to know whether it's from a ESG, environmental, social governance side, which is like money to make a greater impact. But I think when it comes to the everyday investor or accredited investor, that they're looking at it from, what is the risk of my money being lost, and then secondly, how is it going to grow? And so it is this wide spectrum, and then you do have people that care a little bit more about, why they're investing with a certain group, and I think that we showcase that here. It's one of the things that really brought me here. It was one from, again, I take my own advice, which is I looked at the leadership team, I looked at the employees, and I said, what are these characteristics and values? Right, irregardless of what we're doing on a day-to-day, are these the people that I would want beside me if the world is burning down? But also, how are they going to act when no one's looking? And I think it's a testament to what you guys have built as two of our founders, because it showcases in the characters. So for me, I think you guys have drawn in just based on the culture and the values, and I think that speaks to it, and I think it will come off to investors as well.
Thank you.
Yeah, thanks, Sumit. I appreciate that.
The longer you're here, the more you'll realize we're a bunch of schmucks around here.
If you haven't realized it already. I was going to say, that was 4 weeks ago.
Okay, cool. So with that, let's head to our lightning round. So, Sumit, tell me, personal or professional, whichever way you want to go with it, what is your biggest win?
Biggest win? From a personal side, it would be when my parents were amazing parents, but they weren't tiger parents that overlooked everything from an academic or athlete perspective. Really, just all myself and my siblings just did everything, and always just were always driven to kind of go after things. But it was when my parents came for college graduation and had visited for the family events and all those things, but really didn't know all the things I was involved with. But when I walked across graduation and had all my kind of business honors and university honors, and seeing my parents look at me and see that reward of those achievements, that was powerful. I think I touched on from a professional side, it really was this impact. And this is one story, but really starting with 3 family members and seeing that blossom to 3 generations and 10 plus relationships, and seeing the impact and relationships growing from that. I've had like been over to their homes and eaten lunches. I've had Zooms on people's birthdays, celebrate like a 50th anniversary, and so like those really, deep relationships. Those are things that I value.
Yeah, that's great. What's your favorite movie?
Yeah, that was a tough question. I think when I think about it, it's anything that Ron Williams, and this past weekend we watched Mrs. Doubtfire, which is a classic.
Yeah.
I think people don't realize how important humor is, and I really love comedy and humor, but how talented Ron Williams is to be a man, and then be a nanny, and the dynamic there, and then also the story of like a father and family going through a divorce and really wanting to be an active component of his children's lives. It's just like powerful how dynamic of an actor Ron Williams is.
Yeah. That's a good one. What's your favorite food?
Food is an easier one for me. I think if I could live off of Mandarin Jarritos, which is the orange soda at traditional Mexican restaurants, and like street tacos. I know that I have I've made it, because like it's one of my favorite things. Just simple cilantro, onions, and a corn tortilla with a meat, and I'm sold.
That's good
Can
stuff.
you get that in like Youngstown?
You can get it in Youngstown. There's a great place called Norma's Casa de Tacos, and authentic salsa, authentic chips, and just really, really unique.
We'll have to walk down to El Burro someday.
Yeah, I was wondering what the Pittsburgh equivalent would be.
I was fortunate to try it during my first week. I went over there, and it was tasty. As some people on the team say, there's a little bit of a food desert by the office, but it wasn't the authentic Mexican street tacos.
Right.
So.
Gotcha. What's the current growth edge for you? How are you trying to grow?
Yeah, I think from a growth perspective, I think a lot about leading, and also from a what I do is relationship building, but that's a component of sales. So how do I grow from how I'm building relationships is one personal side, but I also think that leadership matters a lot. So as I've grown in my career, I've been fortunate to lead, and I think that being a good leader is something that I want to develop in this next chapter of my career, and then also grow into the opportunity to be more actively growing a portfolio of real estate and be part of kind of the mission that we're having here, which is improving lives and also growing as a company.
Yeah, that's good stuff. And lastly, how about some A+ content you're taking in these days?
Yeah, it's a mix. A+ content, I think about investing, and one of the people I go to from a macroeconomic is Ray Dalio, who founded Bridgewater Associates, one of the largest hedge funds in the world. He just breaks down even just life lessons on principles, which is amazing. Someone that you guys may or may not know is Alex Hormozy, which I go to from more of the sales side and business. A really sharp individual, 32 years old, doing over $100 million in revenue across his companies with his wife, and just exceptional in terms of how he thinks about business and implementation. And then on the personal side, I've grown from personal development, and I really attribute a lot of personal growth from learning principles from different personal development people, but specifically Tony Robbins has been one of the things that when I was in Big Four accounting that I've listened to and think about principles to think about my own psychology or the impact I wanted to have, and it really made me think about life rather than what matters to my life versus what impact and contribution do I want to have. And so that shift, I think, is rewarding, because I think oftentimes if we're only focused on our own needs, it can be good and bad in terms of stress. But I think if you're looking at life from what are you contributing, or what is the legacy you're going to live, or what are people going to say about me and what impact I have, I find it to be more driving.
Mm-hmm. Mm-hmm. Yeah. Awesome. Well, thank you, Sumit, for being on the show. I love your passion for people's lives and the impact that you're able to convey and have through particularly kind of financial education and smart investing. So thank you so much for being on the show. Thanks for our listeners for listening in. We appreciate you all joining, and we'll look forward to having you join the next episode.